Good evening, everybody. Yep, we had a little bit of a glitch tonight. I guess Vince had some medical problems, so we'll have to have him on some other time. All right, so you're going to get the same old, same old. But what we're going to kind of do is what I always say is observe the obvious. And because of the combination of analyzing the different market or the indexes and knowing what each individual candlestick signal represents allows us to have a much more clear perspective of which way the market's going. So we can see right now that we're not going anywhere as far as the major indexes. Pretty much moving sideways. Not only moving sideways, notice the degree of conviction each day. Doji, 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 doji. So even though it's not going down, it's not going up. Now that's not necessarily a bad situation, as we'll get to later on, because on any given day in the markets with simple candlestick scanning techniques, you're going to be able to find the best bullish charts and the best bearish charts. So, and when the market's moving sideways, now it might be that you have some of those best bullish charts in the portfolio as well as some of the best bearish charts in the portfolio. So if I'm looking at this whole scenario, what's our analysis? We're stuck in a wedge. We're not going anywhere with any great conviction at this point. Same scenario on the NASDAQ. However, there's a different, a little bit of a different perspective here. We've got kind of a bullish uptrend, and look where we are. And this is why it's important to know what the T-line's telling us. Look where we are as far as the T-line. Right smack dab on it. So we often get asked questions of what happens when you see you can't tell what's happening because it's bobbling up and down above the T-line. Well, that's not the question. The question is, what's the bobbling up and down above and below the T-line tell us? We're not going anywhere right now. So, is this market ready to sell off? Stochastic's heading down. But note that we didn't have a sell signal here. So we don't have a sell signal that's convincing us that the sellers have taken control. So which way do we think the market's going? Well, we can pretty much kind of assess that it's not going anywhere, except for the fact that the transportation index is heading up. So simple logic would say, if one index is going up and the others are going sideways, does that mean the sellers have taken control? Not really. It's moving sideways. In this case, would it be better to look for bearish or bullish RP? Yes. Yes. That's a good answer. That's like Yogi Berra saying, when you come to the fork in the road, take it. So, in this type of market condition, yes, you want to have both bearish and bullish charts, and we'll get to that. So, I'm going to do this a little bit backwards. I'm going to go to the biggies first, because that's going to tell us also the same information that the general market is telling us. Which direction is Labu going? Kind of a wedge formation supporting off the 50. No real direction. Now, I was going to illustrate that with Nugget, but Nugget had a definite direction today. Hard selling. I think gold sold off pretty hard during the day. That's probably not the right month. Now you can see how you had a support trend right here. So this is the type of thing that I kind of look for, is if we can see what everybody else is seeing. There's kind of a support. There's also kind of a trend channel. And then what happened today? It broke that support. That's telling me after a bearish harami, a close at the T-line and opening lower, it was not only opening lower below the T-line, but it was breaking this downtrend. What can we kind of see happening in this basic chart pattern? Wave 1, wave 2, wave 3. Where do you think wave 3, if it's the same magnitude as wave 1, is likely to go to? Down here to the 200. So if we know that the gold price is heading down, what do you think is going to be happening to the gold stocks? They might become viable short positions. AU, GG, well, GG didn't do anything. That made me a liar, didn't it? AG, MAG. So, didn't you recommend long on gold? A couple of days ago, yes. But remember, just because we recommend, I'll get to another one here in a minute. That remember, we're buying situations based upon the probabilities of what the chart is telling us. So gold was in an uptrend, but then 2 days later, look what happened. That kind of a bearish flutter kicker. That means your assessment should change. So and this is why you always want to learn how to analyze a chart on your own. Because if I'm buying and saying, no, gold's in an uptrend, that's true until the reversal. You want to be able to see when that reversal occurs. So this is the most important element of analyzing a chart, is knowing what it's doing, and notice when it's doing what you think it's doing has reversed, so that you can be out of that trade or any trades on your own without having somebody instructing you to do so. Let's take a look. Did I do Labu? Tesla. So you want to be able to analyze. There's your morning star signal with kind of your abandoned baby, doji gap up. That shows strength. So what's the other things that you want to be able to watch that you know everybody else is watching? Trend lines. Well, they broke through that. So where do you think your next target is? Well, there's a gap to fill here, and then there's a 50-day moving average. That's right. In a news-driven market, anything can happen. Pretty much, yep. So, and I'll get to that. I'm going to remember these because I got a few to show why. So, a lot of people are watching the big ones. There's your reversal signal. There's your reversal up here. Now, remember what this signal is? That's not a signal. So what's that kind of imply? That you watch to see what happens at the first support level. When would I be buying Amazon? Oh, pshaw. Well, that didn't work the way I wanted it to. Well, for crying out loud. I'm going to zip right through this. So you got kind of a wedge formation setting up. So if it started trading positive tomorrow, what situation would you have? Well, you'd have a doji with bullish confirmation, J-hook pattern setting up. So that's why we want to be able to analyze each little signal confirmation and knowing what type of pattern. So that excuse me, goes to our concept of 2 plus 2, that if this opened positive, let's say hypothetically it gapped up tomorrow and started trading positive, breaking through this level. Now what do we have? We've got your best friend signal telling you wave 3 is about ready to start. And what other indications do we have that this uptrend is starting? Because they couldn't close it below the T line when they started back up again. Apple, kind of the same scenario. Doji, Classic still heading down, but if they start taking this back up, now you've got the J-hook pattern in progress. Now, anytime I look at a chart and say, all right, I always refresh my memory or my, confirmation of the candlestick signal's working. Look what happened down here when they gapped it up after kind of a belt hold type signal. Strong uptrend. Where did the selling start? After they gapped it up in the overbought condition, you started seeing some profit taking. Amazon could be a bullish flag, yes. Oh, hold on, okay. Yes, RP is asking if anybody from the UK is out there. This is the place to find people that are doing the same type of analysis and setting up the same system. So if you were out there, RP, no, that's exactly what you should be doing. This is the whole purpose of having a forum where you can get information. Like, how do you follow the UK stocks? Or, so a quick answer would be Metastock is probably much better for charting those stocks. Then you might share information of which brokerage firms trade both UK stocks as well as US stocks. So use this format. That's right, better than the Roman Forum. So here's NVIDIA. We can kind of see what it's trying to do. Also doing that J-hook. If it starts trading positive, especially through this level, where do you think the next target is? Wave 1, wave 2, wave 3. Oh, I guess so. Becky, can you remove? Oh, you should be able to remove it yourself by clicking on an X somewhere. The red X. Okay. Yeah, if you go way over to the right, there should be a red X. Okay, let's see. NVIDIA. Netflix. So, I often try to illustrate that there are times when you should be trading something, and there's times when you shouldn't. When it's telling you there's, hold on, Leonard, we'll get to that one. Yeah, I've got all these. We're going to go through the ones that still look good or don't look good, and why some of them that don't look good still should be held on to. So, did Netflix, we did Apple, and Facebook. So, the rhetorical question is, which direction do you think Facebook is going right now? Well, if you can look at this chart and think, man, I don't know what it's doing, then take your money and go on to something else. Or what was my analysis on NVIDIA? Same scenario, that if it starts trading positive, got a J-hook pattern with wave 1, wave 3 making the target the 200-day moving average. Okay, now let's go to the ones that were not the biggies. We started going after Abercrombie Fitch because of this right here. Now, this is the reason I tell people that your first ABC learning is the 12 major signals. When you've got an inverted hammer, if you see it trade positive after an inverted hammer, again, this is unofficial. This is just my research for the last 40 years. That if they trade positive after an inverted hammer, you've got a 95% probability or greater that you're going to go positive. If that's the case, what type of pattern do you have setting up? Wave 1, wave 2, wave 3 should be the same magnitude as wave 1, which in this case looks like about 7 points, taking you up into about the $33 range. Now, is that relevant to know that information? Well, the whole 2 plus 2 analysis is inverted hammer, J-hook pattern. If I know the J-hook pattern, I know what my upside potential is. Now, I can buy the stock, or I can buy calls, or I can do a call spread somewhere in the midst of that range that is going to give me a high probability trade and an exceptionally strong return. So I'm just going to pick out a number. Let's say if I bought the April, not the April 19th calls, but let's say 2 weeks out. What's that? The 12th. Say I buy the 28s and sell the 30s, and let's say hypothetically I pay 40 cents for that spread. Well, if it goes above 30, my 40 cents goes to $2. That's a good return for a moderate amount of risk. Meaning we don't have to have it to go all the way up to 33 to maximize our profits. We can make good profits knowing what the price trend should be. All right, thanks, Diana. Okay, so that's Abercrombie Fitch because of the identifying this reversal. TRTN, inverted hammer, bullish confirmation. Should you be buying this one now? Well, if it traded positive, what would it be telling us? We've got a doji sandwich after a reversal, kind of a double bottom, potential of more upside. Just the fact that when we identify that inverted hammer bullish confirmation, there's more upside. Now we can say, maybe I got a better entry if I wait to see if this opens positive tomorrow, because if it trades positive, the same magnitude as this, I know I'm still heading in the right direction. These are the reasons why we want to know our patterns. J-hook pattern. That's why we recommended AVID today. What's our upside potential? Wave 1, wave 3. And PISA, or Papa John's. First of all, we got kind of a bobble breakout. Look how it did it with your best friend signal. Doji gap up. What was more relevant to that gap up? The fact that you had kind of a fry pan bottom breakout right here at the 200. Where do you think your next likely target's going to be? Probably back up in this area. Now, why do we go after the patterns? Because think of what the market has done over the last few days of trading. Look what your pattern breakout has done over the last few days of trading. Same scenario on big. Kind of a little fry pan bottom, J-hook, bullish engulfing. Where do you think, if this is wave 1, where did you think your next target was? the 200. So a lot of this is just very simple analysis based upon the signal that we can identify and the targets that everybody else is probably watching, and kind of measure what our patterns usually produce for us. Mendoza, wave 1, wave 2, wave 3. And what could be the magnitude of wave 3? Same as this. Right here, which looked like about 8 points. Meaning from right about in here, 8 points, take you up to, let's say, the $57 range. Now, should you be buying this one now? Well, we can see that we've had a fry pan bottom. We can see maybe there's a little J-hook pattern setting up. So yes, you could still be buying this one on positive trading because now you have a J-hook pattern. You can't close below the, or it hasn't been able to close below the T-line. And you've got a little setup that says if this is wave 1, wave 3 is at least going to take you up into this range. So this is where analyzing what human nature does time after time allows you to make decisions of whether you should get in or not get in. So right about here, you saw your little best friend gap up. Where do you think your next target is on ENLC? Right up here to the 200-day moving average. Boot. Wave 1, wave 2, and how did wave 3 start? There's our kind of our left-right combo breakout with a doji sandwich. Where do you think your upside potential is on this one? Wave 1 was approximately 12 points. 12 points from here would take you pretty much up to the $40 range. Now, will it get there? That's our projected target. But what's our actual entry and exit strategy? You stay long until you see a sell signal. How many long positions would you typically enter in a given week? I suffer from going after too many positions, and my fees kill my profits. RP, I take my portfolio, and depending on what size it doesn't really matter. If it's a $500,000 portfolio or a $200,000 portfolio or a $50,000 portfolio, I'll say, all right, how many positions do I want to buy? Now, this is, I'm going to go off track here for a little bit because this is what keeps your emotions out of your, I try to keep as much decision making with emotions based or behind it as I can. I try to eliminate as much as I can. So when I say I've got a $200,000 portfolio, I'm going to have 10 positions of $20,000 apiece. Now, that puts a discipline into me that normally I wouldn't do, because if I saw another position that I liked, I'd buy more, or I'd margin buy more. Now all of a sudden I've got 18 positions on. That doesn't help my discipline any. If I've told myself I'm going to stick to, what did I say, 10, $20,000 positions, and today I see a trade that looks just fantastic, and I'm fully invested, which I usually am 100% of the time. Nah, not 100% of it. 90% of the time I'm fully invested. That doesn't necessarily mean I've got 10 long positions on. I might be 8 long, 2 short. Or sideways market, I might be 5 short. But if I see something that looks fantastic as far as high probabilities, high profit potential, I can go back and look through 10 positions very quickly, meaning probably in a matter of 45 to 50 seconds, I can look at 10 positions. Well, if I've got position 8 that looks like it's not working very well, or that it might be now starting to get weak and rolling over, I can make a decision saying, all right, maybe I need to close out that one because it's beginning to look a little bit iffy, and go ahead and move my money over to the new position. Now, what that does is, remember, we've got some basic rules that you can stay long until you see a sell signal and a close below the T line. But let's just say, hypothetically, we've got a position like this, and we see another position that's got a strong buy signal, stochastics coming up, and we're looking at our existing position that's got stochastics rolling over. Now, which is better probabilities? To be in something that's in the overbought area, starting to show some sell signals, or something down here where the stochastics are just coming up? Let's move our money out of here and move it to here. Now, the reason I do that is because that takes me with not saying, oh, I'm going to hang on to this one and go buy another one that looks like this. Now I'm at 11 positions. I scrutinize the positions a little bit more diligently to see which ones are starting to roll over a little bit and don't have as much upside potential or probabilities. So for all we know, this one could turn right around and head straight back up. But at the time I made the decision, the probabilities looked a heck of a lot better going into something like this. My biggest fear before candlesticks came along, if I happened to be in a profitable position, which was 50-50, but I wouldn't want to sell because, boy, I would look stupid if I had a big bullish profit and they're not going to get me out, because I know if they get me out, they'll turn it right around and take it back up, and boy, would I look stupid that I bought a stock here and sold it here and then eventually went to 84. Boy, would I look stupid. Well, at least now I've got the visual capabilities to tell me when sellers are coming in and when I can buy back into that position. So I hope that answered. RP, take your portfolio and divide it into a set number. If I've got a $25,000 trading account, maybe I only have 5 positions on. If I've got a $500,000 account, maybe I've got 14 positions on. But I know I don't want to have 18, 20, 25, 30 positions, because if I keep my positions at 10 equal positions, that means each one of those positions is 10% of my portfolio, which means if something devastating happens in one of them, it's not going to kill my portfolio. But on the other side, each position's big enough that I better pay attention and make rational decisions each day of whether I want to stay in that position or move on to something better. Okay, I hope that was not an overkill explanation. Was the same thing. The reason we recommended this was you could see wave 1, wave 2, and then look what started wave 3, a left-right combo, bullish confirmation, breaking this downtrend and telling you the T-line wasn't going to act as resistance. What's our upside potential on this one? Wave 1, wave 2, wave 3, somewhere up there. WPM was the same type of setup. When it broke out, how long did you hold on to this position? Oh, you see it through there till you see a sell signal and a close below the T line. Or if you see a doji in the overbought area, where's your safety stop? Right here, because logic says if it trades back below this level, where do you think it's going to? Back to the T line. So if you close it out right here, what's your evaluation now? See whether they start curling it back up and do a J hook. You can always get back into it. So, oh, I forgot what I was going to illustrate with this. Darn. I was going to show this as an illustration. This one looked good because of what we could analyze was going on, that we had kind of a wedge formation in progress. And I didn't see any news on this. I mean, it traded up for a while, and then it came back down through the T line. So that's where your safety stop should have been. So this also tells us one thing, that even though we can analyze a pattern, a signal, we always want to have a safety stop on, because just because we're analyzing what it should do, that doesn't mean that every trade we put on is going to do exactly what it should do. So I always have a stop that tells me if it's coming back down through here, something's wrong. And that's why you always wait for bullish confirmation. Kind of the same scenario. There was a wedge setting up on Z-Sand, almost ready to break out. Still hasn't broken out. So that's why I would rather pay up for something knowing that it's confirming the breakout pattern. Now, somebody asking, I forgot all the questions that I was going to remember. Something about how do they work as well for short positions as long positions? Yes. There's our bearish belt hold. We're still short SMAR. That's, again, when I put out recommendations each night, if we think we're in a market trend like this, you might see 3 long positions. If you see something like this, you might have 3 short recommendations. If you're somewhere in here or in here, you might have 2 longs and 2 shorts based upon how the market opens the next day. So there are times when you want to definitely have short positions in the portfolio as well as long. Because right now, with the market kind of moving sideways, we know there's probably a good number of short positions out there as well as a good number of long positions. So there was that bearish kicker signal on ZO. So we shorted this one with the expectation that it could get to this target, the gap. Well, yesterday, notice what we started seeing when it came down through and started back up again, with stochastics pretty close to the oversold area. What was that telling us? Well, look how far away we are from the T-line. Then look what happened once it filled the gap. They started buying. So we closed out the position with the anticipation that if they open it positive the next day, there'd probably be a bounce back up to this level eventually. So this is where you kind of start analyzing, where do the probabilities start going against us? Same thing with here. Bearish best friend. Nice short, nice short, nice short. Now a bullish Harami in the oversold area. So what's our strategy? Well, we know if they open a positive, they're confirming our bullish Harami. Where's your next likely target? Up here. So if it opens positive, you're closing out the short position. So this is just understanding which signals and patterns are setting up. Now here was our best friend on Fitch. Doji gap up. That sold off. still looking for positive trading the next day. But if it comes right back up, we can get ready to buy because this is our signal and we haven't closed below the T-line. It may not have been the right time to be buying in here because it was starting to sell, but it's still giving us a signal that the bulls broke this downtrend. Now wait to see, because they're holding the T-line, whether it's not time to be buying. If you bought on positive trading, now you just have to hold and make sure it doesn't close below the T-line. So this one can still be bought on positive trading tomorrow. So when we know what should happen after a candlestick signal, it just puts you in a position where you've got much more knowledge or confidence to get into a position. Here's our message on HIB. What's our message? They gap it up and they to sell it off. Still profit taking. Then what do we have? A bullish harami. So if we just rhetorically ask ourselves, what does a bullish harami tell us? The selling has stopped. We can start buying, because what do we expect now after this message? Oh yeah, 45 degrees. So this is why I've been advocating that everybody learn 4 or 5 different pattern setups, and you'll have more trades when our stochastic's relevant. Well, again, they signal where the pattern is the most relevant. The stochastics are the confirming indicator. So right now, this is telling us we're in a 45 degree. Our stochastics are going to come up. This was a bad one to illustrate. Let me see if I've got something else here. Ralph Lauren. Starting to see the stochastics come up, but your real signal is right here off the 50, a piercing signal, and then you had your kind of a bullish flutter kicker and a breakout. I would think this has got a lot more upside. So you like to see the signals occur when the stochastics are near the lower end of the range. More than likely, your pattern breakouts are going to occur. It's a big fry pan bottom are going to occur. The breakout's usually going to occur when you're already in the overbought area. What do you look for when the market is sideways? Patterns or reversal signals? Usually the patterns, because, for example, right here, just you can see what the fry pan bottom pattern was indicating, even though the market's moving sideways. The pattern is still working. AMRN, you can see you're in an uptrend. There's your uptrending channel. You can see what it's done. Doji, bullish confirmation. Where do you think your next target is? Probably the top of that trend channel. eBay, scoop pattern. Starting off with your morning star signal. If they trade this positive and break through this level, what do you think you've got going on? A scoop pattern with a slingshot effect, J-hook type pattern, wave 1, wave 3. Hold on to your individual ones until I tell Jim to do the double line. J-hook patterns. Conagra. Why? Oh, because it's doing a little J-hook pattern right now. There's your best friend. There's your little J-hook. Where do you think your next target's going to be? DRNA. J-hook pattern. Look what you've got here. There's your bobble breakout. There's your support. There's your J-hook. If this opens positive, what's your next target? Wave 1, wave 3. IMMU, J-hook pattern, morning star signal. Where's your next target? 200-day moving average. And we did AVID. AVID is still probably a buy. Wave 1, wave 3 should take you up here pretty close to the $10 range. The airlines are working well. You can be buying Alaska Air on positive trading, giving you a doji sandwich. Hawaiian Air, same scenario. Got buy signals, inverted hammer. There's a gap right here at the 50 making that. Would you go after wave 4 and 5? No, we're not trading Elliott wave. After, which one? All I'm looking for right now is this trade right here. Could be wave 1, wave 2, wave 3. Now, if it gets up here and pulls back and does a J-hook, now I've got wave 1, wave 2, wave 3. I don't care how many times it does it. I'm just trading off of wave 1, wave 2, wave 3. The only thing that Elliott wave did for us was indicate that there are waves. Now we have much better clarity watching which wave we might be in. So where's the logical place that everybody's going to start buying? Well, you can see you saw a lot of dojis and then a gap up through the downtrend off the 50. What's our next assessment? Wave 3, same as wave 1. So all we're trying to do is put ourselves in situations where the probabilities are pretty strong based upon the candlestick signals that we're going to be in an uptrend. Do we know what the uptrend actually is going to be? Not really, but we can kind of make assessment based upon trends, trend lines, moving averages, anything else that everybody else is watching to see what our upside potential is. Now, if I'm looking at something like this, where my upside potential looks like to be about 20%, yeah, it's decent. If I'm looking at something where my upside potential is 4%, I might as well be going off finding something that has much more upside potential. Ollie's bargain. Look at your big left-right combo. Now, the reason we point out a left-right combo is because it's a very strong reversal signal. Notice what was going on here. Indecision, indecision, indecision. Boom. Left-right combo starts your next uptrend. That type of magnitude. VRA. Notice what you had at the bottom of this J-hook pattern. A bullish engulfing off the 200, back up through the T-line, doji sandwich. If it opens positive tomorrow, what do we got going on? Another doji sandwich. Oops, we just did that. All right, so if we know that Morningstar signal is a strong reversal signal, and there's usually more upside, and if we know that a doji sandwich usually creates more upside, when you combine the two, in our morning sandwich, a McMuffin, that tells you you have an extremely high probability that you're in a bullish trade. D2, Morningstar type signal, doji sandwich, scoop type pattern, breakout. Wave 1, wave 2, going into wave 3. NTEC, Morningstar signal, doji sandwich. First target, 50. Again, anything we can put into our analysis that dramatically improves our probabilities of being in the right place at the right time. Look where they bounced, off the 50. Look what's getting this one started, a left-right combo. What do you think your next move is going to be? Wave 1, wave 3. You can see when it was time to buy. There was the kicker signal. You can see when it was time to sell. There was your bearish engulfing signal. Scoop pattern has got a flat handle. Which one was the scoop pattern? I can't remember. Scoop pattern has a flat handle, then a little dip, and then a slingshot effect to the upside. Was it C-Bay? Yeah, see how you got a flat handle right here, then your little scoop, whereas a fry pan bottom is a big rounding bottom like this. E2 was a scoop. Yeah, see how you had kind of a flat handle and a little scoop reversal. All right, now another method is looking for the breakouts. Nothing. Something. So when do you want to start buying this one? When this profit taking is over, which would mean I'd be a buyer if it came back up through today's open. That tells me the bulls, the selling has stopped. So a scoop is like a J-hook. No, a J-hook has a strong uptrend. This is a J-hook. Strong uptrend, pull back, next strong uptrend. A scoop pattern has a flat handle, then a little dip, and then a scoop looks like an ice cream scoop. CLAG, big breakout. So if it opens positive, tells you the profit taking is over. There's still that breakout has something going on. And VRNT, there's your best friend signal. Now a lot of people say, well, shoot, I don't want to buy a stock that's already up 25%. You do if the signal tells you there's going to be more upside. WCG, there's the kicker signal. A high probability trade setup that you're going to have much more upside. Blue, there's kind of your wedge formation setting up. Watching to see if they bring it back up here and break it out to the upside. So we've got the benefit, obviously, the visual capabilities to see when a pattern is breaking out. Look at your left-right combo. Look at your breakout. Wave 1, wave 2, fry pan bottom, wave 3 to the upside. Monroe kind of broke out in this area with a little J-hook pattern. Also, you stay long until you see a sell signal. So you can find just as many short positions. The bigger the signal, the more compelling there's going to be a downtrend. That's why we shorted Zoo a few days ago. There's a bearish kicker signal. CCL, big gap down. That's powerful selling, telling you there's probably going to be more downside. We recommended shorting SMAR because of the bearish belt hold, then a close, kind of a doji sandwich, close below the T line. Where do you think the next likely target is going to be? Right here, which kind of corresponds with the 50-day moving average. Right now, you know the gold stocks are selling off. AU, whoops, that's not it. Oh, that's Heckler, but you can't short that one. KL, you can see the bearish J-hook, gap down, dumpling top. Possibility of coming all the way back down to the 200-day moving average. So look at your sell signals up here. Dark cloud, very Shirami. If it opened lower, especially if it came down through yesterday's or today's low, where's your next target? Probably down here. What stimulated the selling? Look what happened up here in the overbought area. They gapped up. Anytime you see a gap up in the overbought area, start watching for your sell signals. Domo. Look good, look good, look good. Had a big breakout day. But then look what happened by the end of the day. They brought it back in as a shooting star. When it opened lower the next day, if you were long, you were definitely out of it. And then it closed below the T-line. You can be shorting this one because where's your next likely target? Back here because that's where the gap is. And HOME, best friend gap down, look for more downside. Cena, look at your slow curve. They open this lower. They're breaking this area. Look for some more strong downside. So anyways, right now I would definitely have both long and short positions. We don't, or from what this market looks like, it's not going anywhere. It's still stuck in this wedge until they get out to the point of this wedge and they either break it to the upside or break it to the downside. Now, I would think that this is consolidation during this uptrend that moves sideways and then gets ready for the next wave up. Do gap downs in oversold areas point to a possible bottom? Yes. As long as there isn't a pattern that got you there. Now, Cena is not in the oversold area, but you can see there's kind of a slow curve that got you there. In a situation like this, where you see the gap down in the oversold area, that tells you to start watching, because where do most people sell? They panic sell at the bottom. Bib, that's a gap. That wasn't a gap down. That's a gap, because notice you were in a wedge. Now, if you had been in a downtrend, 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 and then they gapped it down, that's where you start looking for your sells. This is something that happened, whether it was bad earnings or something. So this is not a downtrend that you can see. This is just kind of a sideways movement. That was just bad news. Okay, are there any general questions on candlesticks? If not, Jim, go ahead and do the double line. And then 4.2 seconds, do the next double line. Key Corp. Here's a case where if you'd been short, there's your dark cloud at the same level it topped out before. There was your doji in the oversold area. That's where you would have covered. Let's make this big enough where we can see it. So if I was short this, and it did a doji, my safety stop would have been right here. Because if it came up through there, where's your next likely target? Back up to the T-line. So I wouldn't be short and I wouldn't be long until you see it get up through the T-line. OHI, just stay long. Little J-hook pattern. There's a gap to fill right here. AKBA is one that we're still holding because it hasn't closed below the T-line. There was your message. Then you can see the buying started. So right now all you have to do is stay long as it stays above the T-line. Starbucks, you can stay long on this one. It's a toughie to trade, but you can also see wave 1, wave 2. Look at your bullish Harami right on the 34 in wave 3. symbol TMO. Just stay long also, as long as it stays above the T line. AT&T, that's kind of your evening star. Observe the obvious. An evening star right at the 200-day moving average, right at the same level it topped out twice before. If it opens lower, you want to definitely be out of this position. Stops. You sure? What are you asking? Is that a question? Yes, there's easy logical stops based upon where a price should not be moving. Edge. If I was short, I would have covered the short, but I wouldn't be going long just yet. EXPR. You can be buying this one. Just make sure your volume is good on a $4 stock. Next target should be the 200-day moving average. Amazon needs to definitely open positive and trade positive. If it opens lower, now your next target is likely down to the 200-day moving average. Bed Bath & Beyond, look for a 45 degree off of here. KNX, nothing there to get real excited about. You got a bullish engulfing signal, but you don't really have a great chart to trade. You can be buying this one on strength, but I probably wouldn't be trading this one. An EPD, boy, that one's a toughie. I wouldn't be in it right now. There's just not enough direction on this one. Sprint, stay short. Your safety stop probably should have been here at the T line. And if you're short, stay short. It's just not a good tradable chart pattern. Oops. Best Buy, all you can do here is stay long and look at your bobble breakout. Just stay long as it doesn't close below the T line. Netflix, nothing on this one. I wouldn't be long or short. You're kind of in a congestion area. You did a doji right on the 50. Even if, if it opens lower, if you want to short it, your next target's going to be right here at the 200. But I wouldn't be long or short Netflix right now because there's not enough directional movement to tell you which way it's going to go. Square, nothing. Nothing there to tell you which direction it's going. I'd be someplace else. Adobe, same scenario. You can see you're kind of in a sideways muck. I wouldn't be paying attention to this one until it breaks out through the upside. Macy's, nothing yet here either. If you were long and it came up and touched the 50 and sold off, if this opens lower tomorrow, I wouldn't be long or short. There's no direction on this one. 5 and below, you could be buying this one on positive trading, anticipating a 45 degree to the upside. Tandem, nothing here. If you're short, you stay short. But you use today's high as your stop. You still have stochastics heading down, and you seem to be supporting at the 34 and this level right here. So if you're short, use today's high as your stop. And CDNS, just stay long as it stays above the T line. Roku has had a hard time getting moving. I wouldn't be long or short. There's nothing on that chart to tell you which way they want to take it. TDOC, another one that when you were getting in the oversold area, your safety stop was right here. So if you were short, you would have covered it because now at least there's no reversal signal, which tells you there's probably a bounce but not a reversal, just a bounce. Micron, nothing here either. If you were short, you can see the doji occurring right here at this level. If you're short, it has to open lower and trade lower to stay short. Wouldn't be going long. You can also see you're kind of in a sideways wedge, which means you don't have any real strength one way or the other. AEMD, bullish engulfing. Just if you're trading these dollar stocks, make sure you've got 1 million shares or more trading. I wouldn't be trading that one unless it shows a lot of strength. IMGN, nothing. No direction. See if I can make it big enough to, still no direction. Boeing. Boeing you keep an eye on. It's basing in here, and now there's reports that they're getting close to resolving their software problems with that flap on the back of the plane. So when they get that resolved, you're going to start seeing it move back up. Pfizer, nothing here either. That's not a very exciting chart. I'd be someplace else. And you can briefly stop. Did I explain stops? FedEx, another one. You observe the obvious. Which direction is this going? Really nowhere. Lulu, big gap up, breakout. I'd be a buyer if it comes back up through today's open, indicating a 45 degree. AK Steel. Nothing exciting here either. If you like this one, you can be buying it on positive trading, but there's really no energy in this one right now. We did Netflix. Netflix is, if you're short, you stay short, but it needs to open lower tomorrow. eBay. eBay you can be buying on the kind of little scoop pattern. There's your morning star signal. XLF, I wouldn't be short, but I wouldn't be long. Not until you get back up above the T-line. And keys, I'd be more apt to go after it if it breaks through that, so you're wave 1, wave 2 into wave 3. SID, yeah, wouldn't be long or short this one right now. Royal Caribbean, bullish Harami. If I was short and it opened positive tomorrow, I'd cover the short position. Look where your stochastics are. There do XLF. Yeah, wouldn't be long or short on that one. I'm trying to find a message. What was the message? There was the message. Gapped up, but closed as a dark candle. What'd that tell you? Told you after they opened it, they were selling it. But the message was, there was strong buying, there just happened to be profit taking. So the message was strong buying, so what do we look for? We look for the selling to stop, and that's the message. To start buying after that. LW, It's not coming up here. JP Morgan, another one that I wouldn't be long. I would have covered the shorts, but I wouldn't be going long just yet. Bank of America, same scenario. I would have covered the shorts, but I wouldn't be going long. I wouldn't be in it. The Russell, you can if it opens positive tomorrow. You still have to break this little downtrending channel. Willow, you can get ready to go short with the expectation. Well, it's been holding on the 34. And then see if it goes to the 50. Neo, nothing exciting here. I'd be someplace else. And GTN, nothing exciting here either. I probably wouldn't be long or short. CRUS, same scenario, wouldn't be long or short. There's nothing exciting on that stock or that chart. Chipotle, stay long. NSG, nothing on that one coming up. SSE, uh-oh. Cats, that's not a good looking chart either. I'd be a buyer of this one if it came back up, let's say, through this level, telling us they were coming back up above the T-line. Norfolk and Southern, you won't make a whole lot of money on it, but you can see the fry pan bottom setting up for the next wave. An ARWR, nothing here, would not be long or short, no direction. CSSE, that's a breakout, but it looks like it's probably a very low volume stock, so you just be careful of that one. Okay. Tomorrow we definitely want to see it. We don't want to see the market, well, you know we're in a wedge, so we want to see at least what it does from here. Higher price stocks don't have potential for profit. That's not true. A 10% return on a $50 stock is about the same as a 10% return on a $5 stock. It's a 10% return. Like, which is heavier, a pound of feathers or a pound of lead? Yeah, usually you trade the higher price stocks. You can trade options much better. All right, everybody, let's call it a night. We'll see everybody bright and early in the chat rooms tomorrow. We'll see you then.